And here he is, Matt Reinke. Good to have you on the show again.
Thanks you for having me. Great to be back.
So a lot of volatility this year, huh?
Oh yeah, it's been an interesting and fun start to the year.
Do you like that? Is it fun for you? I mean, is there like some sort of the ride is more enjoyable for a guy who can navigate the market the way you can, or is it just a lot of people calling with a lot of questions, and is it more chaos than it's worth?
Yeah, there's truthfully not a lot of chaos, not a lot of calls. I don't know if it's just a matter of my clients being educated and understanding the drill, knowing what the market does, how this is a truth of ours, that there's going to be volatility. And if you're not prepared for that, you shouldn't be investing, or you need somebody to help coach and guide you through it.
It's certainly interesting, though. I mean, anytime I look at following the market almost as if checking a box score of a sports game. I just like to do it. I like to turn on CNBC and see what's going on. And you see all this volatility, and I mean, it certainly is interesting, nonetheless. We've been off to a crazy start to the year. You have coined something, at least I thought it was coined by you, the folly of forecasting, right? Explain.
Absolutely. Well, I just think there's so many people out there who get paid the big bucks to be out there and make these big, bold predictions about what's going to happen today or what's going to happen in a year from now, where the market's going to be. And what you often see is that these guys who are making all these predictions end up being wrong. They don't get it right, whether it's economists or the guys that you see on CNBC or Fox Business. They're not getting it right, and so often they're having to change course and adjust their predictions.
You know, it's interesting. I actually opened the show here today, and I was making that exact point. You know, we were talking about people that ask the question, is the American dream dead? This has almost become a political point that gets thrown around. And news is dead. Journalism is dead, right? It's all about ratings. Politics are in bad shape because, I mean, look at our options for the White House. Pop culture and entertainment has gotten awful. I mean, the Kardashians, are you kidding me? So, I mean, a lot of this stuff has gotten really bad. And one of the things I referenced earlier in the show was you also see this illness spread through the financial marketplace as well. Jim Cramer probably is not watching the show right now, but he runs around and he beats a desk and he bites the head off a bull or a bear, and people watch that. If you follow Jim Cramer's advice for one day, you're going to lose money. I've watched it, and he never comes out and apologizes for being wrong. It's like it never happened. You know, so I think the point I'm making goes right and coincides with the point you're making is the people you see on TV that are supposed to be the smart people aren't necessarily doing it to give you real information. They're doing it to generate ratings, and it steers a lot of people in the wrong direction.
Totally. It's just for ratings. Or they work for a company and they have to be positive, or they got to be bullish. They got to tell you and sell you in a way that fits their narrative, that fits their agenda. So as investors, people, we need to understand, where is this coming from? And they might tell us one thing, but they're certainly not going to be back on the air to say we need to make another change or we need to do something different because things have changed. So it just doesn't work.
So what advice would you give to somebody who wants to have a conversation with their financial advisor and make sure that they're getting straightforward advice, not what I call commission-based advice? How would you position somebody?
Yeah, well, I think it's important for everybody to know how they're investing and to be able to understand how their advisor invests and how they are compensated. Are they sitting on the same side as you? And so there's a lot of talk today about fiduciary-based advisors, which means they got to put your best interest first at all times, and not enough people understand the differences between all the different types of advisors, whether they're a financial planner, a financial consultant, a wealth advisor. What does it all mean? You got to understand what that means for you and for the type of advice you're going to get first and foremost before you sit down with somebody.
You know, a lot of financial reform came after the market crashed. Do you feel like that's actually helped consumer? I know I'm asking for your opinion more than anything else here, but has that been something that has been good for the consumer? A lot of times you hear that regulation has set people back. I don't care about the politics of it all. I just want to know, as a consumer advocate, are we at least going about this the right way?
I think it's moving in that direction. I don't think a whole lot has changed, but now there's a big fiduciary rule that's coming into place where a lot of stock brokers may have to do what's in your best interest. In the past, they just had to.
Wow. Yeah. I mean, you got to do something that's in your best interest as a financial advisor?
In the past, most advisors don't actually have to. They just got to find an investment that may be suitable for you, but it might not be the best medicine that you actually can take.
I'm not kidding you. The other day I emceed an event. It was for the real estate market, and I was speaking, and a financial advisor rose his hand from the audience, had a question, and the context of the question was about buying real estate. He goes, It's not in my best interest to encourage somebody to buy a home because they're pulling money from me to go put as a down payment on that home. And as a wealth manager, that's not the smartest thing for me to do. And then he went on and on. And I just sat there for a second and I was just, you're telling me that you wouldn't encourage someone to lock into a low rate? I'm not saying everyone should buy a home, right? It's case by case, depends on your short and long-term goals. But that's how a financial advisor is advising, is it's not in my best interest. That's a scary place.
That's how most people's advice comes from, and that's what I love about the seat that I sit in with my clients.
Yeah.
I want to build a plan that's based on their skill sets, their interests, their competitive advantages. And if that means real estate, that's where they can harness the low-hanging fruit. How can we not include that in the plan? And why should I be not set up to do right by my clients? And not a lot of advisors are set up to do that, because that means they're going to be reducing their income to give their clients the best advice. That's not how I operate.
Well, there's certain things that apply in every market. Right now we're in tax season, right? So give us some advice on whether the market goes up or down, left or right. If you can reduce your tax liability and you have a strategic structure to your portfolio, give us some advice here.
Yeah, I think most importantly, people need to be taking advantage of those tax protected accounts that they have, whether it's their 401ks at work or 403bs, Roth IRAs, traditional IRAs. All those resources need to be taken advantage of. But then it's important to make sure that what assets you own, whether it's stocks or bonds or commodities, are held in the right portfolio. And even you need to look even beneath the surface. Because let me tell you an example of a recent client who I looked at her old advisor's portfolio. Over the last year, she lost money in this account that she had. Meanwhile, she has to pay taxes on gains that she never even realized due to the type of holdings that she holds. So she holds some mutual funds that spit off capital gains distributions. That means she has to pay taxes. Meanwhile, she lost money on those same investments that she owned. So a double whammy, paying taxes on gains she never owned, and she lost money on those same investments.
Where's the mistake made in that? How does that happen?
Well, I think oftentimes it happens, one, from the advisor. They're putting their client into the wrong funds that just don't fit their overall plan. And two, there is some personal responsibility. The investor, no matter who is your advisor, you need to understand what you're investing in. You need to understand the why behind it.
Yeah.
Why is this the best thing? And not often, the communication and education doesn't come full circle.
Well, I hope people reach out to you. You know, you're right here in San Diego, illuminationwealth.com. Matt Rinke's become a great friend of the show. He's also on 1170 AM KCBQ, where there are thousands of people tuned in. Look, if you have questions on this stuff, there's a lot of volatility. I think you've been very clear. Don't overreact to the volatility, right? It's natural. It's about having a game plan, and that game plan can help you whether the market is up or down. It's really about having the right type of plan, and that's different for every individual. Is that a fair statement?
Yeah, totally. I think everyone needs to understand, and that's something that I would love to be able to offer is for people out there. You need to understand your risk profile, understand your risk score, and so often people's portfolios don't match their risk personality. And so we have an assessment that can be done for free. It can tell you how much you're paying in expenses in your account. How is your portfolio allocated? How much risk are you actually taking? And is that something that you can actually sit through and stomach? Because at the end of the day, you need to have an investment plan that you can stick with. And not enough people have a portfolio that they actually can.
All right, my friend Matt, thanks for coming on The American Dream. We appreciate you.
Thank you for having me.
All right, coming up next, we are going to shift gears. We're going to dive into the real estate market. It is also off to a pretty crazy start this year. There's a leader in this marketplace named Seth O'Byrne. He is all over the place. He focuses on luxury real estate, but I also see stories of his on social media where he just helped someone buy a $300,000 house. So he's all over San Diego, helping all people in all price ranges. We're going to talk a little bit about a VIP tour that he does with helicopters and some cool things happening in our marketplace in America's finest city, coming right up on The American Dream.